How's it going, guys? It's Marcel here. Welcome, everyone. Here I am with the recap video about today's trades that I executed on GBP USD. So yeah, first I will start with GBP USD, then I will switch to EU, where I took 2 trades also. So overall, I just executed 5 trades today, 3 on GU, 2 on EU. On GU, I executed a loss, a break-even, and a win for 11 risk-reward ratio. On EU, I just executed 2 losses. So in overall, there were 3 losses today, 1 break-even and 1 win, which ended up as 8 risk-reward ratio profit in total. So yeah, first of all, I will break down the chart. I will tell you everything that has happened today in a buy replay. Then I will talk about the emotional side of this trading. And the reason I want to talk about this emotional side is because some of you guys, or not just some of you, most of you guys took the losses as I took, right? So you executed the losses, you executed the break-even, then you just gave up. You said that you're not going to trade anymore today. You just gave up, your mind just messed up, and you couldn't concentrate on trading anymore. Although after the loss, after the final loss, there was a really, really nice high criteria, almost full criteria possibility and entry, which ended up as 11 risk-reward ratio win. So I will talk about this, that how to control the emotional side of your trading, because basically only 80%, only 20% of trading is based on the technical side. 80% of trade, 80% of trading is based on the emotional side. If you can't control these emotions, you can't learn how to control these emotions, then you will end up on the losing side. If you learn how to control emotions, then you will end up on the winning side. And after taking a loss, you will be able to rethink everything. You will be able to realize everything, and you will be able to create new plans for yourself, because almost after every single loss, there will be a new probability, there will be a new setup. Because if one setup fails, then another setup will form on the other side. Because if one of your setups fails, just simply think about it. If your setup fails because you're trying to buy, you're planning to buy, it fails, it means that your bias, your whole thinking was wrong. Meaning on the other side, there will be another setup forming that overrides the original setup that you were thinking about. And after that, you took that stop loss, there will be the real setup that you can take after you took the stop loss. And it happens almost every single time. Just literally think about it. You're thinking about buying. That buy failed. You took a loss. Price went short, created another really, really nice short opportunity, because basically you were thinking wrong the whole time. You were planning to buy while the market was short, meaning you took the stop loss, another setup forms on the other side, which will be a sell. You can take that setup. Or you just took a buy, it was way too high, you were liquidated, blah, 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 blah. Price mitigated a deeper region of a zone or another area that you didn't even mark, that you didn't even pay attention to, and you couldn't even mark it after you took the stop loss because you were just overwhelmed by your emotions and you didn't even switch to the higher time frame. But on the other hand, after taking that buy, after taking the stop loss, price just mitigated another area, price just got liquidity, and you were part of that liquidity. And after that liquidation, it just created the real movement where you can capitalize, where you can take profits. And this is what you have to learn on how to control. But I will talk about this later. So let's just start with the, let me just turn on the AC. So let me just start with the GBP USD breakdown. First of all, giving you a small hint on what has happened on the higher time frame on the 5-minute perspective, but basically you can read my markups, because in the markups I just broke down everything. So here's a quick plan that what we were trying to do here. First of all, there was a 50-minute zone mitigation here, but price only mitigated the high percentage of this area. But as we know, GBP USD tends to mitigate high percentage of the areas and tends not to mitigate 50% of the zones. So that's why I said that after this higher time frame, 50-minute zone mitigation, price changed character on several places on the 5-minute time frame, printed liquidity for this area, and then it mitigated the 5-minute zone also. That's why I said that after the deeper mitigation on this 5-minute zone, we can look for longs, or after the mitigation of this 5-minute supply, we can look for shorts down to this 5-minute. So these were the 2 original plans for the 5-minute time frame. For the 15-minute time frame, these were the plans that if price mitigates the deeper region of this 15-minute area, then we will be able to look for longs. Or if price mitigates, mitigates this supply, then we will be able to take shorts down to this 5-minute demand, but this was the 5-minute plan. Or if price breaks above this 5-minute supply, we will be able to take longs. So these were the plans we were looking for on GBP USD. Pretty simple, pretty easy plans. Reactional base, if price creates a confirmation here on this 5-minute, we will be able to enter. If not, then we will wait for the confirmation here on the deep region of the 50-minute zone. Or we will wait for the mitigation of this 5-minute zone and shorts. Pretty easy, pretty simple reactional based plans. So let me just switch then to the 1 minute time frame and tell you what has happened. All right, so here we are. Remember, for the plans, this was the 5 minute area, right? And this was the 5 minute supply. I mean, this was the 5 minute demand. This was the 5 minute supply, waiting for reaction on any of these zones. Session open will happen. We are not trading in between these areas. We are not trading this price action. We are waiting for either the mitigation of this zone, of this supply, or of this demand. These are the only plans we are waiting for. Okay, so price just printed more liquidity here. Actually, this was the 50-minute liquidity as I marked it on the markup, and there was 5-minute liquidity here, which has been taken out by this movement. So right after this session start, price just swapped out this 5-minute liquidity into the 50% of this 5-minute area. Then it reacted strongly and created a V-shaped rejection, but it wasn't strong enough to create a change of character. It couldn't change the character to the upside here. Instead of changing the character, it just simply broke the structure again to the downside, but still closed inside of the 5-minute zone. So there was another chance to wait for a change of character here. But in reality, it did not happen, meaning the first plan failed. Why? Because price simply just couldn't come from this 5-minute area, meaning we can delete this plan, we can wait for the next plan, which was wait for the mitigation of the deep region of this 50-minute zone and wait for the change of character after a deep mitigation. Deep mitigation has happened here. As you can see, price mitigated more than the 50% of this 50-minute area. Right after this mitigation, what has happened? Price changed character to the upside, right? Here was a character changing movement, perfect character changing movement, which did leave two valuable zones behind. First one was this one. I mean, basically this is the second one, and this is the first one. The deeper one, which I'm marking out currently, is the extreme, and this is the decisional. So we have an extreme zone, we have a decisional zone. Plan played out perfectly because price mitigated this deep region of the 50-minute area, changed character to the upside, created nice inefficiency, created a V-shaped rejection. Basically, all of the criteria were there. Even liquidation too. Let me just show you. Here we are. So let me just scan the criteria for these entries. Okay. So marking everything out. What are the criteria? First criteria is obviously the higher time frame mitigation of a 50-minute area. Second criteria is pro trend, because in the market I showed you that we are bullish on every single time frame, right? We are prioritizing long trades over short trades. No question. Third criteria, inefficiency. Inefficiency here on the decisional, inefficiency here on the extreme. Fourth criteria was the liquidation, because more liquidity has been swept into the deep region of this 50-minute zone. Basically, this whole bottom was liquidity because this was a low percentage mitigation, which counts as liquidity in itself. Sorry, my monitor will turn off. Okay, now it won't. So basically, this was the liquidation, perfect liquidation, low percentage mitigation of a higher time frame zone. If this low percentage mitigation is getting swept out into the deeper region of this zone, then it will be liquidation. But basically, it almost created double bottoms here also. So liquidation criteria was tick. Liquidation, fourth criteria. Fifth criteria was the change of character. This is the first variable criteria. Second variable criteria, which is the sixth overall criteria, was the 50% mitigation. 50-minute zone has been mitigated on the 50%. Then seventh criteria was the V-shaped rejection. Price was coming down, mitigating the deep region of this zone, and immediate turning up with a V-shape, leaving a V-shape behind perfectly. Eighth criteria, cut by liquidation. There was double bottoms created for the decisional entry. Perfect. Ninth criteria, price wasn't coming from an unmitigated opposite-sided higher time frame zone here at this region. If I believe here on GU there wasn't any 5-minute area. No, sorry, there was actually a 5-minute area. On EU there wasn't a 5-minute area, so I will just mistake these two pairs. So the 9 criteria is not tickable because price was coming from a 5-minute opposite-sided supply zone. Okay, the 9 criteria this way is the strong pro corrective pullback. Longs are much stronger than shorts. You're going to see it on the higher time frame. You're going to see it everywhere. That longs are much stronger than shorts. If I'm switching to the 50-minute time frame, you can see that just compare the long movements with the short movements. Price is just constantly pushing up, over and over again, creating this really slow pullback. So that is the 9th tickable criteria, right? Sorry, let me just come back here. And the 10th criteria was the last criteria, so it was a 10 criteria trade, was the liquidity to target. There was perfect liquidity target in the form of this liquidity trend line. All of this line was liquidity target, right? And there was liquidity target even above it right here, triple taps, which was the last and final target point, swing target point. All right. So it was a 10 criteria trade because there was liquidity target. Perfect. We had 10 criteria for this trade. Let me just delete all of them quickly. Just a minute. So if you see 10 criteria, what are you going to do? You're going to set an order. You're going to set a limit order because that's what we do. 10 criteria means we are setting a limit order, right? All right. So at this point, I get tagged in the trade right here. It was a really nice exact tag on the full body. I used 2.5 pips stop loss. I was targeting this supply that I showed in the markups, and it was running pretty nicely. It went up to break this high point, which means I did set it to break even. So I did set my stop loss to break even. Then after this one, price just simply swept me out on break even, right? Let me just replay it back a bit. So price swept me out in break even. That's totally fine. I took a break even here. Actually, this break even trade did create another opportunity, which was the extreme entry, because price just formed liquidity here for the extreme zone. Basically, this was all liquidity, right? So there was liquidity formed for the extreme. So it had 10 criteria also. Why 10 criteria? Because with this liquidity creation, this was the combined liquidation for the extreme entry, meaning we have 10 criteria again. And the reason it's not 11 criteria is because price is still coming from this 5-minute supply. So that's why it's 10 criteria. But, you know, we use the risk split entry. I use the risk split entry, 0.5% risk here, 0.5% risk here. So what has happened? Price came down to the extreme zone. It tagged me in. Then it immediately tagged me out. I did set